Welcome to this explainer. Today, we're stepping right into the wild, completely unpredictable canopy of modern finance. Consider us your ultimate jungle survival guide. We're going to demystify the high-stakes dangers and, the potential rewards of cryptocurrency investing. Look, if you've ever felt totally overwhelmed by the sheer chaos of digital coins, trust me, you are not alone. This financial jungle is dense, and it's absolutely full of traps. But hey, it's also packed with opportunities if you actually know where to look, and more importantly, how to protect your stash.
So here's our agenda for today. We're looking at 1. Aping into disaster, 2. The big rock, 3. The crypto roller coaster, 4. Anatomy of a rug pull, and finally 5. Smarter monkey investments. Let's dive right in.
Section 1. Aping into disaster.
Let's start with the inciting incident, right? That exact moment of temptation that traps so many unsuspecting investors out there in the wild. I mean, picture this scenario. You've probably seen it play out on your own feeds 100 times. A famous monkey on the internet posts a rocket ship emoji. Suddenly, the price of this brand new, heavily hyped, glow-in-the-dark banana coin goes vertical. I mean, the chart is just a straight line up. Your heart rate spikes, and you might feel this overwhelming, frantic urge to dump every single leaf you own into it before you miss out on the wealth of a lifetime. But stop. Just wait. If you do this, you're about to literally ape into a disaster. What you really have to realize here is that your leaves aren't just currency. They represent your time, the hours, the sweat, the energy you put into gathering them. And once you trade that precious time for worthless digital dust, it's not coming back. So what's the psychological driver behind this behavior? Like, why jump into these risky digital coins in the first place? Well, listen to this quote. Most monkeys jump in because they're just utterly frustrated. They say they're tired of the nonsense from the monkey bank and the monkey government printing leaves until they're literally not worth eating. And honestly, it's completely understandable to be frustrated by that system. The fees, the slow processing times, the inflation, it's a lot. But here's the real danger. Aping in. Investing purely on raw emotion without critically thinking about the risks is exactly how you end up monkey poor and monkey sad.
Section 2. The big rock.
To really understand why these impulse investments can be so incredibly dangerous, we first need to look at the underlying technology powering this whole jungle. Crypto is fundamentally different from traditional money. It's not controlled by one central monkey bank. Instead, it relies on what we can think of as the big rock, which is the blockchain. The big rock is essentially a decentralized system controlled by the entire troop. Every single trade, every exchange of leaves for digital bananas is permanently etched into this stone for everyone in the jungle to see. And on the surface, that sounds incredibly safe and transparent. But here is the massive catch that trips people up. The rock is completely neutral. The rock honestly does not care if you're making a terrible, life-ruining deal. It just records it.
Section 3. The crypto roller coaster. When we compare traditional financial markets to trading on the big rock, there's a pretty stark contrast. Think about it like this. When you invest in the traditional stock market, it's generally like taking a smooth car ride through the countryside. Sure, there are some bumps along the way, but it's relatively stable and heavily regulated. The crypto market, on the other hand, that is a rocket-powered roller coaster headed straight for a brick wall. The volatility is just staggering. A single tweet from a prominent monkey can cause the price to completely crash or skyrocket in a matter of literally minutes. It's an environment fueled by pure, unadulterated momentum and sentiment. Because of that intense volatility, monkey psychology actually becomes your worst enemy. If you let FOMO take over, you end up making some really classic mistakes. You buy when prices are already at their absolute highest, or when everyone online is just screaming about a specific coin. And if you do that, well, you aren't actually investing. You are just acting as the exit strategy for the elite monkeys. Think about it. The early adopters need someone to buy their overpriced coins so they can cash out those massive profits. So when you buy at the very top, you are essentially just handing them your leaves and taking on all of their risk.
Section 4. Anatomy of a rug pull.
Let's actually break down the exact, chaotic sequence of the classic rug pull scam so you can spot it a mile away. Okay, step 1. The creator relentlessly promotes a shiny new digital banana, using tons of hype and influencers to build up the buzz. Step 2. You and thousands of others get super excited and invest your hard-earned leaves. Step 3. Because of all that sudden demand, the price shoots up, making you feel like an absolute genius. But then comes Step 4. The creator, who actually holds a massive portion of the supply, quietly sells everything they own at that peak price. Which leads us to Step 5. That immense sell-off drains all the liquidity, and the price instantly drops to absolute zero. When the dust finally settles, the creator has all your leaves, and you are left with a permanent Big Rock entry proving you own something completely, utterly worthless.
Section 5. Smarter Monkey Investments.
So now that you know exactly how these jungle traps work and how the rug actually gets pulled, let's pivot to some safer ground and talk about actually protecting your wealth. We have to clearly separate the noise from actual investment vehicles. Joke coins are super high risk, they rely entirely on chasing rocket ships, and they're incredibly prone to crashes. Blue chip companies, on the other hand, are like the massive established trees in the jungle. They grow slowly, and more importantly, they pay dividends. If you want a lower risk path to wealth, you should be looking at something like the S&P 500, which basically represents a basket of the 500 largest companies in the jungle. That's that smooth car ride we talked about earlier.
But listen, I totally get it. The allure of the big rock is strong. If you absolutely must have crypto in your portfolio, the smartest approach is a total change in mindset. You need to hodl. Meaning, if you're going to buy digital assets, you buy established ones and hold them for the long term instead of chasing those volatile overnight moonshots. You really have to treat it as a long-term technology play, not some get-rich-quick lottery ticket.
Beyond just investing, you can also optimize your everyday jungle finances smartly and safely. For instance, use a Leaf card, which is basically a traditional credit card, to build a high credit score and earn banana points. You can then redeem those for real-world perks like hotels and flights. That is a zero-risk way to maximize your leaves. But here's the absolutely crucial #1 rule. Never use bank leaves, meaning borrowed money or credit, to buy cryptocurrency. Combining borrowed money with a rocket-powered roller coaster is a catastrophic risk that will lead to crippling interest rates. And trust me, those rates are not very interesting at all.
As we wrap up this explainer, I really want to leave you with a final thought. The financial jungle is always going to be full of loud noises, flashing lights, and the alluring promise of easy wealth. But the next time you see a rocket ship emoji online and feel that frantic urge to jump in, just take a breath. Ask yourself, are you making a calculated, rational decision based on real value? Or are you walking straight into a trap designed by elite monkeys? Ultimately, will you build lasting wealth, or will you be the monkey left holding the bag of rotten fruit? Keep your leaves safe out there and never stop learning.